Hello everyone and welcome back to Explain the Charts, your go-to source for in-depth technical and fundamental analysis. Today is March 24th, 2026, and we are looking at a very interesting day for Intel Corporation, trading under the symbol Intel. Intel has been a primary focus in the semiconductor space lately, especially following a series of high-profile news events. One of the biggest headlines recently is ARM's launch of an AGI CPU, which poses a direct threat to Intel's dominant position in data centers. Furthermore, Intel announced at Nvidia's GTC event that its Xeon 6 processors will serve as host CPUs for Nvidia's Rubin systems. This partnership highlights Intel's continued relevance in the AI infrastructure world despite fierce competition. On the consumer side, the launch of the Core Ultra 200 series mobile and desktop processors has received positive reviews from tech critics. However, investors remain cautious as the company reported a slight revenue decrease and a net loss for the previous fiscal year. Institutional activity is also mixed, with firms like Nordea significantly increasing their stakes, while others like BDF Gestion are trimming. The broader market is currently struggling for direction, with the major indices showing significant volatility over the last few trading days. Intel's current forward P/E ratio is sitting quite high at approximately 91, which is leading some analysts to question its short-term valuation. Despite this, some market specialists see a solid bottoming phase for the semiconductor sector as a whole. We need to determine if the current price action reflects a healthy consolidation or the start of a deeper reversal. By looking at the news and the data together, we can start to form a clearer picture of the trading opportunities available. Let's move into the chart data to see how these news stories are translating into actual price movement. Switching to the daily chart, we can see a massive run-up that occurred earlier in the year, peaking around late January. Intel hit a 52-week high of $54.60 on January 22nd, which was a significant milestone for the company's recovery. Since that peak, the stock has entered a corrective phase, characterized by lower highs and lower lows on the daily time frame. The price is currently hovering around the $44 mark, which has historically acted as both support and resistance. We can see a heavy sell-off that occurred in early March where the price dipped significantly, hitting a local low near $41.60. This dip was largely driven by sector-wide pressure and concerns over manufacturing delays in Intel's next-gen chip technology. If we look closely at the candles from mid-January to late February, we see a clear distribution pattern after that $54.60 high. The daily transactions spiked during those red days, suggesting that institutional sellers were liquidating positions into the strength. However, the $42 to $44 range seems to be providing a cushion for now, as buyers have stepped in to prevent a further slide. The current price of $43.75 is sitting right in the middle of this recent consolidation zone. Short-term traders should keep a close eye on the $46.50 resistance level, which has capped several attempts at a breakout recently. A daily close above $46.50 would be a very bullish signal, potentially indicating that the corrective phase is over. Conversely, if the price breaks below the March low of $41.64, we could see a rapid descent toward the $34 psychological support. The 200-day moving average is also sitting down near that $34 level, making it a critical area for long-term investors. The volume has been tapering off during this consolidation, which often precedes a significant move in one direction or the other. Let's zoom in on the 1-hour time frame to see how the market reacted to the specific news events throughout March. On March 4th, we saw a strong intraday rally where the price jumped from $43 to nearly $46 in just a few sessions. This move coincided with the initial positive reports regarding the Core Ultra processor reviews and the foundry-first pivot announcements. However, that momentum was short-lived as the price immediately began to drift back down toward the $43.50 support level. Notice the heavy volume on the 1300 hours Universal Time Coordinated Candle on March 9th, where the price showed extreme volatility before closing higher. This type of price action suggests a battle between bulls and bears at these specific price levels. The 1-hour chart shows a series of failed breakouts above the $47.50 mark throughout the second week of March. This confirms that there is significant selling pressure waiting for the stock every time it tries to regain its footing. The hourly trend currently looks neutral to slightly bearish as we continue to trade below the major hourly moving averages. We can also see that the price often gaps during the pre-market sessions, reflecting the influence of global economic headlines. For short-term scalping, the range between $43.50 and $45.50 has provided several profitable opportunities this month. However, the tightening of the Bollinger Bands on this timeframe suggests that a volatility expansion is coming soon. If the news flow turns negative regarding the AI supply chain, we could see this hourly support break quite easily. On the flip side, any surprise announcement regarding new foundry customers could spark a quick move back to $48. Always watch for a sustained hourly close outside of these boundaries to confirm the direction of the next leg. Now let's look at the 15-minute chart to analyze the most recent trading sessions on March 20th and March 23rd. On March 20th, we saw a sharp drop-off in the morning hours, with the price slicing through $46 and hitting a low of $43.64. This move was likely a reaction to the broader Great Rotation, where investors shifted money out of semiconductor darlings into other sectors. Wait for the bounce, though. By the end of the session on the 20th, the price had stabilized around $44. On March 23rd, the stock opened slightly higher but faced immediate resistance at the $45.20 level. Throughout the day on the 23rd, the 15-minute candle showed a steady decline back toward the $44 level. The volume was particularly high during the first few hours of the New York session, indicating strong participation. We can see a support shelf forming right around $43.80, where the price bounced multiple times on the 23rd. This $43.80 level is our immediate line in the sand for the current trading day. If this level fails, the next support is the March 9th local low of $41.64. The relative strength index on this time frame is currently leaning toward oversold territory, which could prompt a minor relief rally. Any such rally would likely face stiff resistance at the $44.80 to $45 zone. The transactions have remained steady, showing that there is still plenty of liquidity in the stock at these prices. Look for a high-volume reversal candle if the price touches $43.70 to confirm a potential short-term bottom. The 15-minute time frame is showing a classic descending triangle pattern, which usually breaks to the downside unless a catalyst arrives. Returning to the daily view to recap, Intel is at a historic crossroads between its legacy business and its foundry future. To summarize the key price levels, we have major resistance at $46.50 and $48.50, and psychological resistance at $50. On the downside, we have immediate support at $43.80, followed by $41.60, and a long-term safety net at $34. I believe there is a 60% probability that Intel will continue to trade in a sideways range between $42 and $47 for the next month. This consolidation is necessary to digest the gains from the start of the year and wait for clearer financial guidance. A bullish breakout toward $55 becomes likely only if Intel can report a significant increase in its AI group revenue next quarter. A bearish breakdown below $40 is a 30% possibility if macroeconomic inflation remains sticky or if ARM's market share grows faster than expected. The remaining 10% is reserved for a black swan event in the semiconductor supply chain that could reset the entire sector. Investors should watch for the upcoming quarterly guidance and any further SEC filings regarding institutional stake changes. The transition to Dr. Craig Barrett as the new board chair is another corporate factor to watch in the coming weeks. Overall, Intel's strategic partnership with Nvidia remains its strongest bullish catalyst in the AI era. However, the high valuation and negative net income remain significant hurdles for a sustained rally. Short-term traders should trade the ranges, while long-term investors might wait for a more definitive trend reversal signal. Always use stop losses to protect your capital in this high-volatility semiconductor environment. Keep an eye on the news regarding 6G development and Intel's collaboration with Ericsson for long-term growth signals. This has been a comprehensive look at Intel for March 24, 2026, here on Explain the Charts. Remember, this video and all content on this channel are for educational and informational purposes only. None of this should be taken as financial advice. Trading stocks involves significant risk of loss. Always perform your own due diligence and consult with a certified financial professional before making investment decisions. Thank you for watching, and we will see you in the next chart analysis.